Hey, welcome to the Wednesday Wake Up from the Jersey Shore. I'm Chip Watson, and this is Helen Ann Lloyd. If you're not a subscriber already, we welcome you to click the link below, ring the bell, so you can get notified when we put out content like this, informing you as to what's going on here at the Jersey Shore and in general with what's happening with real estate.
Hey everybody, thanks for joining us today. We are rolling into the beginning of May tomorrow, and spring has sprung and we are starting to see a lot of folks coming to the market. We are hosting open houses for some of our new construction, some of our existing construction, and we are seeing a lot of buyers coming in, a lot of folks coming in, and they're feeling a little frustrated and they want to make a move and they're struggling.
Yeah, and I don't know if the buyers are actually frustrated. They're more frustrated in maybe not finding enough choices. Buyers always like to have more options. But one of the things that we hear from buyers is the hold back because of the current interest rates.
Correct.
As far as financing goes, when interest rates are in the higher range where they are now, it really holds back people's buying power.
We've been representing some new construction, beautiful 4-bedroom and 5-bedroom properties. And we've had a lot of folks coming in that currently own a 3-bedroom condominium. And they're like, look, we would love that 4th bedroom. Love that 4th or 5th bedroom, depending upon what we're
Move up people. They've outgrown their 3-bedroom, 2-bath.
They love it here and they really want to trade up. But their dilemma is they have got an amazing interest rate and they are saying, I can't give up my amazing interest rate and be somewhere between 6 and 7% for my second home condominium purchase. Mm-hmm. What do I do?
Right. And so they're confused and they don't have any real outlet until rates change.
Everyone's at an impasse.
They're at the whim of whatever the interest rates are going to be set at.
For the most part, we've been saying to folks, we've been keeping our eye on an interest rate reduction since 2022. Well, now it's the spring of 2025. It's 3 years later. When's that happening?
Yeah,
we don't know.
So it's been a little bit of stagnation because a lot of sellers don't want to put their property on the market, like we said, then give up that low interest rate and just to get into a higher payment and a higher interest rate for something that they really would want to enjoy. So we started exploring different options and speaking to people that we collaborate with and work with in other markets where their market is a little bit slower. We're fortunate that our low inventory keeps things moving, but it's been at a snail's pace.
And not for lack of desire.
Right.
It's really more the lack of a strategy or a tool or a way to affordably get into that place that they're looking for.
Right. Or the seller
or that trade up person to trade up.
Or them to give up the rate.
Right.
So how can they benefit from being very strategic in maybe some ways and securing a low interest rate? How do they get on from that property, grab some equity, and still benefit as a seller?
Exactly. And we have been doing some masterminding and finding out that there have been other markets around the country that are experiencing something similar. Mm-hmm. And with some creative financing tools, we now have something that we can offer to our sellers that are considering selling their home and potentially trading up to something else or selling their home and just cashing in on their equity. And essentially, it's a seller financing tool. And why, if you were a seller, would you want to consider seller financing? Well, in a tough market, you could potentially create a spread between the interest rate that you currently have and offer your buyer a higher interest rate, say an interest rate at 4.99%. Well, now it makes it be a very attractive product to your potential buyer because you're offering them a little bit of a lower interest rate for a very specific period of time that you guys negotiate and you talk about, you figure out. Now, you might be saying to yourself, well, hey, Helen, that sounds great, but there's just one problem. I have a mortgage on my condominium. I can't do seller financing. That's the difference. You can only do owner financing if you own your property outright, but you can do seller financing and still have a mortgage. And essentially, this tool allows you to continue to have your mortgage gets paid. You're receiving payment from the person who's now bought your home
at a higher
interest rate. Your mortgage is being paid. They're paying the taxes, the insurance, and the property. They're paying the water and the sewer.
Traditional mortgage.
It's the traditional mortgage. You're not necessarily the bank and that you have to worry about collecting. It's being done on your behalf. It's being serviced by somebody else on your behalf. Mm-hmm. And the beautiful part about it is that now you're actually creating some cash flow. What we have learned is for folks that have taken advantage of this tool, they're ultimately selling their house for 20% more when they finally stop receiving those payments and they get that final payoff from their buyer when their buyer refinances a few years down the line. So this is a really interesting tool to consider, again, for whether or not you're looking to trade up or just simply exit the market, but don't necessarily need to pull all of your equity at this time.
Right.
You can still pull a good bit of your equity, whatever it is
This
you want to do
works
with it.
perfectly for the folks who don't necessarily need to have all the proceeds out at this specific time. So just like a traditional purchase, the buyer would be coming to the table with at least 20% down, much like a conventional purchase.
Or more.
Yeah.
Quite frankly, it's whatever you want to
as the
negotiate.
seller would now have that money to be used into any investment vehicle or another property.
Right, because you as the seller have to say to yourself, if I'm trading up to the next property, how much cash do I need? If you were thinking, I'm going to cash out my condo, sell my condo, cash in to trade up and use that to pay for my next purchase. Well, how much of that do we need to pull out to help make that make sense? Because you can pull out 20, 30% depending upon what
your terms would be dictated by the arrangement you have with that
Correct.
said buyer. The great thing is that you get to market your property at a low interest rate to attract buyers in. They will get vetted as if they were going through a traditional.
Oh, they were well-qualified buyer.
Well-qualified.
Well-qualified buyer. These are people that could very well purchase a home through traditional financing.
Correct.
They're saying, hey, I'd rather not. I don't want to pay between 6 and 7% for my second home condominium. I'd love to work with you and have you hold the note for a couple of years at a 4.99% interest rate. Everybody wins. Oh, you want a little more deposit money? No problem. I'm still winning because my monthly payment is a heck of a lot lower. I now have the property that I want to be in, and it now gives me the opportunity to wait out those interest rates a little bit longer and possibly refinance within that term.
Which you will, and within 3 years.
Exactly.
Because most of these terms they want the seller out in 3 years.
Yeah, for the most part, most people don't want to hold the note for too much longer than that.
Right.
But it's really very custom. And if it's an arrangement that's working for you and you're creating some cash flow from it, you may decide to continue that relationship. Quite frankly, we have some properties that we're considering liquidating, and we were talking, and I said, this is a brilliant tool. This is a brilliant tool. I'm not even looking to trade up, but I'm thinking to myself, are you kidding me? If I can sell my house at a number that I would sell my home for at a beautiful market price, I'm now creating a spread in interest rate. I'm saying to these people, I need at least 20% or 25%, that I'm putting a nice bit of money in my pocket in the event that I see something else that I want to scoop up. I've got cash ready to do it. And now I'm making some cash flow every month.
Right. So for the next 3 years, we'd be getting a premium.
It's a no-brainer
on what we're paying on the current mortgage that we have, and then what will we be collecting? So that would be cash flow created for the next 3 years.
In addition to the money I've already put into my pocket that the buyer has given me as deposit.
Yeah. And the buyer wins because the buyer's now secured that property. They get to live, enjoy everything that comes with it.
Yes,
and they're paying,
buyer owns the house.
They're paying at market rate, but they're getting the house and they're getting it at a lower rate.
So now you might be saying, okay, that sounds great, except I still have my existing mortgage on my condominium and I have a mortgage on my house in Pennsylvania. So now my debt to income ratio is going to be out of whack and I'm not going to be able to qualify for a mortgage for my trade up property. So what's your answer to that? Our answer to that is this program actually has portfolio lending, and we can put you into a mortgage that makes sense for you to allow you to trade up and move on. So it's problem solved. This will not count against your debt to income ratio. It's really, think of yourself as a seller bridge loan, but that you as the seller are not necessarily fully exposed here. I think it's an incredible tool. It's a great tool that a seller could use today to market their property, be able to be very competitive from a pricing perspective, not feel like they have to offer a reduction in points or a reduction of a price to attract a buyer or offer some kind of a crazy bonus to attract a buyer. You don't need to do that. Let's offer an interest rate that now allows that buyer to save a lot of money every single month. It makes your property so much more attractive. And if you are thinking about trading up, this is a beautiful tool that allows you to do that because, again, that debt to income ratio that you may currently be worrying about is not going to come.
Right, because that mortgage is taken off your books or off your portfolio or balance sheet, and now you can move right into the next property.
Exactly.
Because now you actually have increased your income because now you have more cash flow.
And again, we're talking about well-qualified buyers. These are people that would qualify through traditional lending, so certainly not an issue.
Just imagine if you were a seller and you needed to get your home sold, but yet you had no other way other than reducing your price. or changing up some marketing, what's your options? And that's what really led us down this path of talking to people in our industry who are just ingrained with other ideas in the way that we can figure things out to give other people solutions.
It allows the consumer to sell faster, buy smarter, and get more. And here's the other thing, folks. What do you think is going to happen when interest rates go down? Prices are going to go up.
Yeah.
Happens every time. As soon as interest rates go down, prices go up. So you want to be the guy that's like, oh, great, prices are already high, interest rates are down, now the prices are going to be higher. That kind of stinks, right? Why not be able to say, hey, let's make a deal right now where I can lock in the price I want, get the interest rate I want, and be able to wrap it up and move on. It's a win-win for everyone. It's an incredible tool.
If you're somebody out there that has never seen something about like this, wants to find out more information, please reach out to Helen Ann and myself. We're glad to have
this program's been
scenario.
vetted. The folks that we've been masterminding with, essentially, they were a mortgage company. And they were churning and burning mortgages like there was no tomorrow, doing an incredible amount of business. Market starts to turn. Okay, we're doing refis. Market starts to turn. Well, now we're not doing anything. This is crazy. Right. So they start laying off their people. And like, this doesn't make any sense. We need to be creative here. We're in the mortgage business. We've got to figure out a way to get these properties sold. We're in the real estate business. We need to be creative and mastermind and figure out a way to get these properties sold. It's a wonderful tool, completely vetted, nothing sketchy about it. It's been about 200,000 mortgages a year are done with seller financing, not owner financing, seller financing. So this is really
a chance to become a bank.
Yeah, it's your chance to become the bank. I mean, my gosh, right? Everybody hates paying interest. Well, guess what? You now get to be the guy that's collecting it on the spread from that beautiful interest rate that you locked into when you purchased your home or you refied a handful of years ago. Super smart move, right? Super smart move. I mean, I'm loving my interest rates on my properties, and I don't want to sell.
And you don't have to be Big Dom to come collect because it's just a traditional mortgage.
Exactly. It's a traditional mortgage. It's actually collected and you're going to get the money deposited right into your account every single month. And your mortgage is going to be paid first. And then the spread's going to be deposited to you. It's something to really consider, folks. It's a very creative tool that can be used to help buyers and sellers come together and allow you, if you're considering it as a trade-up person, looking for something bigger and saying, I don't know what to do here. Let's talk about this. Feel free to reach out to us and we can give you some more information. We can do a little demonstration. We can actually do a demonstration and show you with your current interest rate and what the current sale price could be for your condominium and what your current mortgage is, what this would look like. Right. And we can really give you a true example of some numbers to help you understand, maybe this would make sense for me, maybe not. But it's a conversation that you may want to consider exploring.
So we welcome your questions. We welcome you reaching out to us. And in general, look forward to warmer days and seeing you here at the Jersey Shore. So for Helen Ann and myself, we look forward to seeing you.
There's just one more thing I'd like to say.
Okay. Helen Ann wants to say something else.
Go Tigers.
Go Tigers.
Go Tigers.
Buy you Bengals.
Buy you Bengals. Here we come, baby.